Let's talk tax now. In fact, post the budget, there's been a lot of uncertainty and some nervousness as well that we saw on Friday regarding the lack of clarity on GAR. Then on Saturday, the Revenue Secretary came out and said that the government is yet to take a view on GAR post April 1st. Let's get Ketan Dalal, Senior Tax Partner at PwC India, to discuss all of this and more. Mr. Dalal, good morning and thank you for joining in. First, if you could just tell us, what your view is on this whole GAR issue. I mean, now there is a clarification that has come through from the government, but do you think that would soothe the nerves, or do you expect to see more from the government soon?
Yeah, the general anti-avoidance rule as GAR as you called it is something which is to come into effect from the financial year 15-16, and it is already legislated. But I am not sure whether there is a readiness on the part of the government in terms of tax officers being trained, whether there are appropriate ring fences, etc. And that is the context in which there was an expectation for an announcement of some deferral. Now, a couple of macro points I want to make here. The problem is one can't have a conceptual objection to GAR. The problem, however, is that given the empirical evidence of what happens on the ground in an Indian context, there is a fear that the implementation may be very sweeping, because the language also is very sweeping. And the concern is that unless there are some very concrete examples of when it can or cannot be invoked, and by the way, the Shom Committee in one of its reports on GAR 2 years ago actually had given many examples. So if something like that is there on paper and tax officers are trained, that is a better point of time to invoke or to operationalize GAR. So as you know, the Revenue Secretary did say that we have not taken a final call and we may still defer it. But as of now, it's there in the law to be operationalized on 1st of April 15, and therefore it will need an amendment if it is to be deferred.
Okay. Have you got any feedback from your FII clients or any other clients, even corporate clients, that this would rattle them, they would sell out or defer investments?
Well, I won't go as far as to say defer investments, Lata. But, as you said, corporates, GAR, contrary to what many people actually believe, is applicable to everybody. It's applicable to you, to me, to corporates, etc. And, the concern is that because it is subjective, the ability to handle this issue on the ground seems to be the cause of concern. And the two areas in which it could apply more than others is, let's say, FII investments, for example, or private equity investments. Other could be restructuring, Let's say a profit-making, loss-making company merges into a profit-making company, and there may be very good commercial reasons. But tax officer can, for example, turn around and say, oh, you merged it, because there is a tax benefit. I'm sure there is a tax benefit, but that was not the main purpose. But the problem is the onus of proof. Of proving that you did not do it to reduce your tax is on the taxpayer, and that's a very onerous burden. And contrary to the normal, principle of law which says, you are innocent until you are proved guilty, here it's the other way around, and that is also a big concern on GAR. But yeah, I'm not saying anybody has said we'll defer investments, but I'm not saying there's no concern either. There is a concern.
Okay, fair enough. What about on the issue of REITs? How viable do you think it will be for REITs to go through on the back of the announcements that were made? Or do you think that, because of the tax leakages that are now emerging, there could be some hurdles?
I think by and large, as you know, the SEBI draft REIT regulations are already there. And one of the things that was expected was in relation to clarity of taxation. And now they've introduced, which is not exactly a pass-through, but it is still a single point taxation, that either the interest or the capital gain will be taxed only either in the hands of the trust itself or in the hands of the investor. Now, and even when the sponsor transfers to the trust, it will not be taxable. Now, there will be obviously some leakages here and there which may need to be fine-tuned, but overall I think it's a good provision, and to the stressed real estate sector, I think it's a good move. Of course, the transparency in the real estate sector, etc., needed to really make REITs go to their full potential is a non-tax issue. But from a tax perspective, I think by and large, broadly, this seems fine.
Okay, actually, the real estate guys were complaining that there is still, myriad property tax from various states, and that issue has to be raised before the REITs are finally launched.
Yes.
I don't know if you applied your mind to that. But also on the issue of retroactive taxes, actually the Finance Minister reiterated the power of Parliament to continue to do that, but he has appointed that committee to which any retroactive tax applications could be scaled up to. Is that a salve at all? Is that ameliorating conditions for corporates, or is it really not making any difference?
Lata, there are 2-3 very different aspects to the retroactive or retrospective. The committee that you talked about is a very, very limited committee. Let me explain what we are talking about. Yeah, it is only a committee which will look at any new issues arising out of indirect transfer as opposed to being a committee that will look at any retrospective cases in general. So it is not just on the last bill, but even generally only for that indirect tax transfer. So it's very, very limited. So that is number one. The second is, of course, there has been a disappointment that the retrospectivity on the indirect transfer has not been neutralized. And the third is, given that the budget date was July 10 and not 28th February this time, while the government may not have intended, there are, sort of indirectly emerging retrospective things that have come up, and we've all been reading about it. The 12 months extended to 36 months for long term, the dividend distribution tax, FMPs, etc. All of, not the dividend distribution tax, but the 12 to 36 months, unlisted shares sold in April or May, etc. So there are quite a few aspects on all of that, which indirectly or maybe unwittingly seem to have emerged.
Okay, I have just one final question that I needed a clarification on. In the finance bill, there was a statement which said that the capital gains tax exemption on the reinvestment of the sale of only one home will be allowed. So is that different from what was there earlier, and do you think that could sort of curb demand?
There was, on the curb demand part, I don't know, but I'll tell you what the issue was. There is a section called 54, there are 2-3 separate sections, but let me focus on the main one. There is a section called 54, which essentially says that if you have a house and you sell it, and within a specified period, 1 year before or after, you buy another house, then the capital gain on the first house is exempt. Let's call it the existing house and the new house. Till now, there was no clarity on whether you could sell your existing house and buy 2 new houses, and which typically happens, let's say, when there are 2 brothers, they sell their house and they buy 2 new houses. Now they've said that it will be only for 1 house. So if you sell, let's say, a large flat and buy 2 small flats, the set-off will be only against one of the flats, and you can choose the more costlier flat for the set-off. So yes, there is a change to that extent. Till now it was controversial. Now they have made it clear, of course, in a manner adverse to the taxpayer, but they have made it clear. So to some extent, yes, it may impact demand.
Okay, Mr. Dalal, it was a pleasure speaking with you. Many more tax questions, but we are out of time on this show itself. Thank you very much for joining us with your perspective on how we should understand both GAR as well as the retrospective taxes and the myriad problems that remain